From late September through mid-December of 2022, the British pound gained almost 20% against the US dollar, far outpacing the euro, which gained 14.5% in the same time frame. Analysts' consensus was that in late fall, the pound was pricing in, one, major negative effects of the Russian embargoes, and also, two, political turmoil. Quite a bit has changed since then, as the worry over a massive energy crisis in the coming winter turned out to be overestimated due to the unseasonably warm weather. Now, since December, the pound has traded in a defined range between 125 on the upside and around 120 on the downside, with a couple of exceptions. Now, events of the last couple days have changed the story and seem to be threatening the downside of the range. First, on February 14th, the US CPI came in higher than expected and changed Federal Reserve rate expectations up to a terminal rate above 5.25%. That's according to the CME FedWatch tool. Now, on the very next day, UK CPI came in lower than expected at 10.1% versus expectations of 10.3%. And on the same day, US retail sales came in significantly higher than expected at up 3% month over month versus 2% expectations. Now, despite the data point all pushing lower, the 120 level has held strong. Now, CME Group offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micro in these examples. If a trader believes the British pound could fall from here, they can express that by selling the March micro British pound futures contract at 1.2005 and targeting a move to the November congestion area of 1.1505. A stop for this trade could be placed above at 1.2305. Now, this trade could make $312.50 if your target is reached and risks $187.50 if you're stopped out of your level. Now, if a trader believes that the British pound could bounce from here, they could buy that March micro British pound futures contract at 1.2005 and target a move near the upper bound of the range at 1.2455. A stop for this trade could be placed below at 1.1755. Now, this trade can make $281.25 if your target is reached and risks $156.25 if you're stopped out of your level.